One of the biggest questions we hear from buyers right now is when are the interest rates coming down? But here's the real question. What if waiting for them to calm down actually costs you more money? Today, I'm going to be breaking down what really impacts your monthly payment, how interest rates affect affordability, and why focusing only on the interest rate can sometimes cause buyers to miss opportunities. Hi, I'm Keri Browning with the Browning team of Coldwell Banker McMahan. We help buyers and sellers throughout Louisville and the surrounding areas. And one of the biggest misconceptions we see in people thinking about buying a home is thinking all about the interest rates. We hear it all the time. We see it in the news, conversations on the street. Hey, what's the interest rate these days? But is this really what we should be focusing on? The truth is, your monthly payment is influenced by several factors, and understanding those factors can make a huge difference in a much smarter decision. Most people focus on and ask when they are starting to think about buying a home about interest rates. That's the number one question. What are interest rates right now? But lenders and what we encourage our buyers to focus on is something a little bit different. We focus on and ask the question, can you comfortably afford that monthly payment? Think about this way. Uh, Would you rather have a 4% interest rate with a payment you couldn't afford or a 6.5 interest rate with a payment that could comfortably fit into your budget? Obviously, the one that you're going to be able to afford, right? So the goal isn't about getting the lowest interest rate possible. The goal is about buying a home that you can comfortably enjoy without financial stress. Most buyers think their payment is simply the house plus the interest rate, right? That's kind of what we think when we first getting into this area and learning about it. That's what we think. It's just the house and the interest rates, but it's made up of several different pieces, including your principal, your interest, your taxes, insurance, HOA fees. That's something that a lot of people don't consider when considering a home, and mortgage insurance. So here's an example. A $300,000 home doesn't automatically mean a specific payment because taxes, insurance, down payment amount, and loan type all affect that final number. So I've seen two very similar homes with the same price with notably different monthly payments because of taxes and HOA fees. Now, let's talk a little bit about interest rate myths because there's a lot of them out there. One myth is you should wait for rates to drop before you buy. Yes, rates do matter, but buyers sometimes give them too much power. Think about this. If rates drop significantly, okay, great. But what does that mean? What happens when rates drop down? You're going to have an influx of buyers. What does an influx of buyers mean? That means more competition, more multiple offers, higher priced homes. So waiting for rates to drop isn't always an automatic win like people kind of think it is. You've probably heard this saying, and if you haven't, listen up because this is a good one. Marry the home, date the rate. Yes, it's a little cheesy, but there's actually a lot of truth behind it. Your home is a long term purchase. Interest rates go up and down. Refinancing is always an option later down the road. So if you find that perfect house, interest rates might be a little bit higher than you're really wanting, but get that perfect house while it's there. You can always refinance down the road. Of course, nobody knows what the rates will be in the future, and refinancing isn't guaranteed, but many buyers who purchased when the rates are higher were still able to benefit later when rates declined. News headlines love talking about the interest rates, um, but honestly, your personal finances and what you can afford matter more than the national headlines. So, we have our buyers ask these questions about the rates or about your monthly payment. Is it something that you can comfortably afford? Can you still have money left over after that payment? Money to travel, money to go do things, go out to dinner, go on vacations with your family. Is this home going to fit your lifestyle? These are the questions that you should be asking instead of all about focusing on the interest rates. Sometimes families wait for that perfect market condition before making that move, but life doesn't always wait. Health changes, parents age, mobility decreases, and moving becomes more difficult. So, if you and your family are considering downsizing and everyone is fairly healthy, it's better to make a move with a slightly higher rate now than to wait. And then over that time period of waiting, health declines, mobility declines, and it becomes more of an obstacle to move. The right move should be based on your goals and needs, not trying to perfectly predict the market. So, if you're thinking about buying, my advice is simple. Don't focus on the interest rate. Focus on monthly payment, your long term goals, and whether the home fits your life. A great lender can help you understand exactly what your payment would look like and what price range makes sense for your budget. We work with some amazing lenders, and we can certainly connect you with some if you are interested. Um, Reach out. We would be happy to talk about the market and connect you with a great lender that can help you understand your numbers. If this video has been helpful to you, please make sure to like, subscribe, and share it with someone who's thinking about buying a house or their first home. And as always, thanks for watching. Keri Browning with the Browning team, Coldwell Banker McMahan. See you soon.